In the weeks leading up to the visit of Japan's chief trade negotiator, the White House suggested that a deal was on the horizon. Speculation was rampant that the visitor from Tokyo might secure the first-mover advantage, as described by Treasury Secretary Scott Bessent. This would mean winning favorable terms for being the first country to agree to a deal with the Trump administration. However, Ryosei Akazawa, Japan's Minister of Economic Revitalization, returned home without an agreement. He informed local media that he had urged the Americans to reconsider their extremely regrettable actions. Additionally, Japan's Prime Minister expressed grave concerns about some policies announced by the Oval Office. This week, when Bessent meets with Japanese Finance Minister Katsunobu Kato in Washington, D.C., discussions are expected to include a request to boost the yen. Sources told Reuters that this request is likely to be denied. The resistance from Tokyo contrasts with statements from the White House, where President Donald Trump claimed big progress in talks with Japan. Commerce Secretary Howard Lutnick also stated that Trump was totally in the driver's seat regarding tariff negotiations. He mentioned that meetings with over 75 countries seeking deals were occurring back-to-back. These conflicting messages have led analysts to question the feasibility of Trump's pledge to make 90 deals in 90 days. Investors are losing confidence in the U.S. dollar this week due to these uncertainties. Many observers had seen Japan as an early test case for a quick deal. However, bilateral negotiations between the U.S. and Japan ended last week without any agreement. It's unclear which issues remain unresolved. Possible sticking points include U.S. demands for access to Japan's agricultural markets, revaluation of the Japanese yen, higher military spending in Japan, or purchases of U.S. liquefied natural gas. While the U.S., as the world's largest economy, might be pressuring its allies toward a deal, other global pressures are also at play. Notably, China has warned that any countries working against its interests will face consequences. The U.S. has increased tariffs on China significantly, reaching a 145% hike on imports. Signing a deal with the U.S. could expose any nation to retaliation from Beijing. A spokesperson from China's Commerce Ministry stated that China firmly opposes any party reaching a deal at China's expense, and will take countermeasures if necessary. Internal political pressures also play a role in these negotiations. Japan's Prime Minister is facing upper house elections on July 20, after the 90-day tariff reprieve ends. This may compel him to avoid appearing conciliatory to the U.S. until after the elections. The events surrounding last week's U.S.-Japan negotiations suggest that there will likely be an extended period of bilateral negotiations between the U.S. and its partners, possibly stretching into July. This prolongs uncertainty about each side's willingness to make concessions. Investors might have been overly optimistic about quickly reaching a deal. Now, markets may need to prepare for a prolonged process. The U.S.'s trading partners might attempt to wait out President Trump, anticipating that concessions will be easier to obtain as a potential U.S. economic slowdown deepens.